Okay, Saturday the 7th of April, and we're going to have a look at our US indexes, the E-Mini SP and also the NASDAQ. We'll take a look at the main zones for day trading these markets in the trading week ahead. So first thing, I hope you all had a good Easter break. I spent most of it down in Wales, had a really good weekend, and it was nice to have a shorter week last week also, actually. Okay, so the market, we're going to start on the S&P 500 as always. The market has been chopping sideways at this, around about this 2600 level. Now, most of the indexes are at pretty key levels at present. What we've been doing is ranging here on the S&P. But really, if we start failing on the S&P at these lows now, there's not a lot holding this market up until we get all the way down to this whole area down at around about 2470, and then really the very key levels are all the way down here at 2400. So it's kind of last chance saloon here. You know, if the market starts to fail here, we're expecting another strong correction on the not only the S&P, but most of the indexes are sort of putting in similar price action. Now, what I've been watching is this market has been following a fairly steep trend line on the way down. So we've tested once, we then spiked up and tested again. A little test here as we drifted sideways. And then at the end of last week, this is where we started to find resistance once again. Now we're also testing at this area right here, which is very key resistance. So we've came up, we've created a double top, and then we've broken down. When you have a double top like this, especially if you are already in a bearish movement and it's a breakdown from a bearish double top, very, very key level of resistance as the market tries to break back up once again. So, I mean, the S&P needs to get up above at least this whole section right here at 2692 before it starts to look more bullish. At present, it just isn't giving us those bullish signs. It's holding below a very steep trend line, and it's still testing at this very key level of resistance right here. Let's mark it up, sitting at 2680. I mean, really, it's the whole way down. But what we're going to do is we're going to have a look at it as a couple of different zones here. Really, we've got one from 2680 down to 2670. And then we've got 2665 all the way down toward 2645. So coming into this market next week, first thing is any of these areas up above, they remain very key resistance to look for that continued weakness. Now, what would be our sign that the market is potentially starting to turn more bullish? It would be the break through the trend line. So if we started to get back up above this 2665 level next week, becomes worthwhile looking for potential bullish bounces. Really, I wouldn't get too excited about it. I'd only be looking for the moves up into this 2680 to 2670 level just up above. And then if we start breaking up above this level, then the market is starting to look a little bit more bullish. We can start to look for the stronger bounces, certainly up toward 2695, really the 2700 level, and potentially much higher. But at present, we are still holding down below this level, and it remains a very key resistance. Now, key support, you know, it's given us pretty clear evidence. 2600 down toward 2585. So basically that whole round number section. And what is it lining up with? That previous level of structure that we have been going over on this market. It's where we found support last time the market crashed down toward these levels. It's very important moving forward. Really, if we start to get candle closes on the daily time frame below this level, then it's starting to suggest that move down toward these key levels. Really at, let's mark it in. I'd expect to see really at least 2490. At present, we're still holding. Got a few levels of support. Got one at 25, around about 256. Let's bring it up a little bit. Sit it at 2565. Down into 2550. Really, what we're doing is we're taking where the market paused, broke up, and then started testing As support, the buyers kept stepping in, and then we forced the market up above what we're doing is we're creating a swing point. We're creating the low, the high, the low, we're breaking up the higher high, the higher low, and then we're taking off into that bullish trend once again. So it's a very key level of support also. Both of these areas, whilst testing at this level, it's worthwhile looking for the buys. I want to be a little bit careful if we start getting pulled into this trend line. It's only if we then start breaking through the trend line that I'd be happy to start looking for stronger buys on this market, and potentially all the way back up toward 2620, which is another level of support and resistance, to 2628 right here. Down below there, we've also had these two spikes, 2530. It's pretty close together. It's around at 2530 to 2525 or 2027. Although we've had very strong reactions here, I'm looking at this as more minor a level. If we start breaking down below here, it's worthwhile looking for resistance and the moves down. If we start breaking down below here, it's worthwhile looking for the moves down once again. And really, if we're starting to break down below here now, I would expect the market to be coming down toward this 2490 level. So very key resistance up above. This level also a little bit more minor, 2630 to 2620. Lining up with the sloping resistance line, certainly, for weakness. If we start to break up above that sloping support and resistance line, looking for those bullish bounces. Very key support at present, 2600 to 2585. Worthwhile continuing to look for those bullish bounces, but we're being careful of this sloping trend line pressing toward the market. If we start pressing up against it, you don't want to just be buying straight into it, which wouldn't make any sense. Breaks down below for resistance and the moves down, breaks down below for the resistance and the moves down. At present, this is also very key support. Basically, it's this whole swing point. If we start breaking at this level, it's very likely we're then going to see at least 2500 moving forward on the S&P in the medium term. Okay, guys, let's move on to the NASDAQ. Okay, now we're going to do the exact same thing for the NASDAQ. So this market, it's not looking quite as bearish as the S&P, but we're having similar types of price action. And really, what I've been saying for some time now is that it seems to be that the NASDAQ is really holding up a lot of the other indexes. It's been a lot more bullish when the other indexes have been relatively bearish. And it's in my opinion, it's helping hold these markets up. Now, having said that, we've got quite a lot of support down below on the NASDAQ. However, the real key support starts when we get down toward this whole section down here at around about 6,000. Below this level right here at 6.3, around about 6.310. There's not really a lot holding the market up before we get to the 6,000. So, I mean, if we start failing at these levels now, especially the way the market has moved, we've had a very strong move up. We've then broken back down. We've then had another very strong move up, which made a new high. However, that new high wasn't able to go anywhere. It wasn't able to attract buyers as we started to come back down into the previous key level of structure. And instead, we've crashed all the way back down. Now, as yet, we haven't made a new low after this swing point. But if we're starting to fail down below this 6,310 level now, it's really not looking good for the NASDAQ. And there is the potential there for a much stronger correction down toward this 6,000 level. That would be, I'm not saying it's going to happen in a day, but in the medium term, certainly I'd expect it to start coming down to test that level, maybe a little bit higher up toward 6,050, but really 6,000, that round number, will act as an attraction for the market. So let's have a look at this market's levels. The first thing is we've also got the very tight trend line on this market. We've been following it all the way down. Really, there's not been too much of an attempt to break through. When we got this strong move up here on the 4th of April, I was really watching to see how the market was going to react, because potentially then the bulls may have been attracted to this market back up toward these previous key levels, around about 600-700. And that didn't happen. And instead it's rejected once again pretty strongly also at this sloping resistance line. Now the MA200 is holding this market up at present. And if we start to fail there, really it's this level. It's this level right here. If we start to fail at this level, then I'm expecting potentially 6,000 to be tested on this market in the medium term. So at present, really we're still looking at this as bearish until at least we start to break out of this very strong downward movement. Now, key levels. 6,590 down towards 6,550. Very, very key resistance on the NASDAQ, especially now, because if we're breaking up above it now, we're going to be breaking up above this trend line. Very key resistance. If we start to break up above the level, then it becomes worthwhile looking for stronger bullish bounces once again on the NASDAQ. Certainly back up toward previous tests at 6,640. But really I'd then be expecting the market to come back up toward key levels up here at 6,715 down to 6,675. So if we're starting to break up above here now. We've got a minor level in between, 6,495 down toward 6,470. Now this level is going to be good next week if it's lining up with what? That trend line. If you see the market pressing up and we're getting resistance and it's lining up with this strong trend line, it makes sense to again continue looking for that weakness on this market. Now, as I've mentioned, key support is really sitting at this MA200. So next week it's going to be around about 6,430 down toward 6,400. So you got a round number and the MA200 on this market, which is giving it support. Still worthwhile looking for those bounces. Again, we're being careful of that trend line. If we're breaking down below this level now, I would really expect to see us retesting at that 6,310 level. Really got support at 6,342 down to 6,310. We could actually move this down just a little bit toward 6,295. So breaks down below this level now. Especially if we're breaking down below the MA200 once again, I expect the moves down into 6,345 to 6,295. Now, if we're starting to break down below there, especially without the MA200 now to hold it up, I'd start to expect that move down toward at least 6,122, but really, as I've mentioned, it would then be the 6,000 level in the medium term on this market. It would certainly be confirming more bearish price action. So 6,252 down toward 6,225. Again, that's a good level of support right here. If we're breaking down below this level, again, looking for the moves down, potentially buys down here. It's a strong swing level, and then if we're breaking down below there, this level right here, sells down toward 6,122. Let's mark it up, around about 6,130. Down toward about 6,100, 6,095 right here. So those are the main levels on the NASDAQ moving forward. Key thing is sloping resistance, still continuing to hold below it. Sells into this market as we press up to test any of these levels. If we start to break up above the trend line next week, especially if it's up at this level right here at around about 6,590. If we're breaking up above there, then it starts to become worthwhile looking for stronger bullish bounces. Really, I'd expect to see 6,675 tested. It's if we're breaking up above. At present, we're not seeing that. So resistance up above for the sell positions. This remains key support right here. If we're breaking down below, the moves back down towards 6,340. And then if we're breaking down below there, again, it's really opening up that move down towards 6130. But we have support in between at 6250 to 6225. Okay guys, that's everything for this week. As always, I hope you found it helpful. I hope you all have a good trading week next week. I'm James Orr, and thank you.